All right, there we go. Hopefully this should be back. All right, hopefully we should be good. Sorry, everybody. Welcome, welcome, welcome. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. This is our Thursday live stream, and actually I am glad to announce that we are now live on both Facebook and our YouTube page, our VectorVest Live YouTube page. So for anybody who can hear me out there, let me know that the sound is coming through. Looks like I have audio now. Can you guys hear me? Good. Awesome. Thank you for that, Scott. So yes, this will be the first time we are testing it out to stream both on Facebook and on YouTube. So bear with me if I get bogged down a little bit. I'm getting familiar with it, trying to get used to it. Awesome. Thank you for that, Mukesh. See, it's good now. Thank you, thank you, thank you. All right. So welcome, everybody. Every single Thursday, we go live here on Facebook and now YouTube, where we talk about the VectorVest Stock Advisory app. The VectorVest Stock Advisory app is the most comprehensive trading app to help you make the most out of your investments and get the most benefit out of it to be successful in the market. Our key goal here every single Thursday is to help you become financially independent, utilizing the stock market to help consistently make money and outperform the market and be able to live off of the income that you're making off of stocks. So if that's what you're interested in, make sure to like the video, hit the notifications if you're on Facebook, subscribe to the channel, and let's go ahead and jump right into it here today. So for anybody tuning in for the very first time, just to give you a little insight on the flow that we typically go here, or that we take here, is we start taking a look at what's going on in the market today, and then we start to dive into our topic of discussion. Today we're going to be looking at charts, how to use them, how to really utilize them and put them to use. No matter whether you're a conservative investor or a short-term trader, charts are like a big picture of a stock, and as the old saying goes, a picture is worth 1,000 words. So after that, as always, we will save the personal fan favorite to the very end, where we'll analyze any stock that you want to take a look at in less than 10 seconds utilizing the Stock Advisory app. So with that, let's go ahead and jump right into it here today. So as of right now, the market is 3 ticks into the green. Therefore, the color guard is bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. If we scroll down here a little bit, we get the color guard. And as we can see, that's where our 3 green lights are coming from. So the first one we're looking at is the price of the VectorVest composite. The VectorVest composite is an arithmetic indexed average of about 8,700 stocks that we track in the US market each and every day. And we feel this gives us a better representation on what's actually happening in the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 8,700 stocks all into one. As we can see, it's green since it's higher day over day and week over week. The second is the RT, or relative timing, which is looking at the short-term price trend of the overall market. It's cast on a scale of 0 to 2, so above 1 at 1.03 tells us the short-term trend is up. Also, the fact that it's green tells us it's moving higher day over day and week over week. The third is the BSR, or buy to sell ratio. The buy to sell ratio is looking at the number of buy rated stocks that we have compared to the number of sell rated stocks in the database. And we give a buy, hold, and sell recommendation on each stock every single day. And this is based upon strict rules rather than just analyst opinions. So that way you're getting a systematic approach to analyzing the stock rather than an emotional approach, if you will. So as we can see, the green light in the buy to sell ratio, that tells us it's higher once again, day over day and week over week. These 3 indicators are comprised to come up with the MTI, or the market timing indicator. This is looking at the underlying trend of the market. And once again, this is on a scaling of 0 to 2. So at 1.20 tells us the underlying trend of the market is also up currently as well. After that, we then get the trend column, which shows 2 parts of the trend each and every day. So the first part is looking at the primary wave, or simply the weekly trend of the market. So since we see it's up, that just tells us that the price of the VectorVest composite is higher than it was 5 trading days earlier. The second part is just reiterating the MTI. So since the MTI is above 1, the underlying trend, or the second part of that trend column, is also up. And then for our most conservative investors out there, we then get to the calls column, which stands for our confirmed calls. Now, our confirmed calls are our last line of defense. They're our last signal we get to get into the market and our last signal we get to get out. As you can see, we still remain in that confirmed up situation as of today. All right, so let me make sure we have sound. So sound should be coming through. Give me one moment here. Just responding back to somebody. So if you guys over on YouTube, can you guys hear the sound? I just want to make sure that everybody's able to hear and everybody's able to view today's stream. All right. Cool. Awesome. Thank you for that, Kathy. All right. So once we've gotten over that, we then want to come down here to the advanced declines. And this tells us the number of stocks moving higher today and comparing it to the number of stocks moving lower today. This is extremely useful for any trader or anybody looking for a good day to be buying, because what we're looking for is a 2-to-1 ratio. So if the market's moving higher, we want to see twice as many stocks moving up than moving down. And if the market's moving lower, just the opposite. We want to see twice as many stocks moving lower than higher. So since we have an up day right now, we want to look for twice as many stocks moving higher. Right now we're seeing 59% of stocks moving higher and 29% of stocks moving lower, almost right around that 2-to-1 ratio. So therefore, if you're looking for a good day to be buying, this looks like a pretty decent day so far. But then, as always, we want to make sure we take a look at the major indices. And right now, we can see the Dow is up about 0.75%. The Nasdaq's up almost 0.9%. S&P's up about 0.6. Overall, the VectorVest composite up just shy of 0.6% for the session. So green, exactly, Mark. Green is good. We do see some green here. So that definitely tells us that, if we're looking for a good day to be buying, if we need to re-enter a position or if we need to add to a position, today would be a good day to be doing so as of right now. All right. So that brings us our recap for what's going on right now. Let's get into our main topic of discussion, and that is going to be charts. Once again, charts, no matter whether you're a day trader or you're a long-term buy and hold investor, charts are a big part of finding consistency in a stock and making decisions based off of those moves. That's because charts have no emotional aspect into it. And a lot of the time when you're reading a chart, you can see moves starting to come early or forming early that help predict what's going to happen very soon. And those kind of moves are typically going to happen, or those kind of signs are typically going to happen before you see the talking heads on TV coming out with some news article to justify that move. It's interesting that you see this because, if you want to get a head start into a position early before everybody else, charts can give you that extra advantage. All right, so what we're going to do is we're just going to simply go into some of our premium watch list here. And what we can do is take a look. Let's go ahead and utilize that new Buzz ETF watch list that we put together for you guys last week. So we'll go ahead and click on that. First stock that comes up here is Moderna. Well, all we have to do is tap on Moderna if that's the one we're looking at. We can get a quick analysis right below, and then to see the graph itself, simply tap on it there. And then we can maximize it. And now at this moment, I have a pretty basic default layout, or not default, but pretty basic layout here for you guys. I have the price shown in candlesticks. I have a 40-day simple moving average. And then below there, I have the MACD. Now, if you're looking for the most basic long-term look or long-term view of a stock, as always, 1 year is most likely ideal. And then we go into the settings here. This is where we can really customize our charts to fit what we're looking for. So as you can see, we have a few different options so far. So first and foremost, you can change your graphs from weekly to daily or daily to weekly bars. You can make it an area or a line or a candlestick chart. I prefer candlesticks a little bit more because I feel like they give us a little bit more added insight into the daily moves and the investor mentality, but everybody's different. Line charts are definitely fine as well. And then below there, we get the show the ratings bar. So this is something unique with VectorVest. As I mentioned earlier, we have the buy, hold, and sell ratings that we give every single stock every single day. And you can add that onto the top of the graph to see that transition from stock to stock as well. But we're going to get into the next section, moving averages. So as you can see, we have the ability to add up to 3 moving averages at any given time. Right now, I have the default of 100 or 40-day simple moving average. But if we want to change this, all we got to do is select on a moving average or turn it on. We can choose simple, exponential, or weighted. Let's just keep simple. We'll go in here. We'll change this to, let's say, a 50 and then hit return. And then we'll turn on number 2 and we'll change it, let's say, to a 150. More longer term approach. Hit return, turn off the 40-day simple moving average, go back. Now those are active. We'll see that in a second. But then below there, you have first and foremost, envelopes, which are a great way to identify major price spikes in a stock. So if you're looking for extreme price levels to be hit and taking advantage of either the retracement or any of that, envelopes are a great place to start for that. Then you also have support resistance, which is we've talked about many, many times in the past. Support and resistance is the best crowd mentality indicator out there. You can tell if it breaks above a resistance level that investors are bullish on it and that the probabilities are in your favor of the stock continuing to run. Or if it breaks down below a support floor, that tells you that the investor mentality or the investor sentiment on that particular stock is that the stock is going down and it's running out of steam, and that could give you an early exit out of it. So we come down here. We're going to skip over those for right now. We'll get into those in a little bit for more short-term trading. But what we're going to do is we're going to focus on the lower graph section. Here's where you can get a few different options that can really help you out. One, volume, RT for short-term price trend, great for short-term trading, those types of situations. But then you can also look at the dividend, earnings per share, and then you get some technical analysis, MACD, RSI, and DPO, which can all be customized to fit whatever type of trading you're wanting to do. So for now, since we're looking for that more longer term approach, that's where we're starting here today. Let's go ahead and add on the earnings per share. Once we've got that, go back, go into the graph, we'll maximize it. Maximize it here. And there we go. So now we've got the 50-day simple moving average shown as the light blue. The dark blue is going to be the 150. And then you have the earnings per share at the bottom. So as a long-term subscriber, or as a long-term investor, what you're looking for is a nice steady rise in price from bottom left to upper right. Also a nice steady rise in earnings from bottom left to upper right, like a stair-step pattern. The reason why earnings is so important as a long-term investor is because if earnings are steadily rising, that shows that the company is making money consistently. And as the old saying goes, money goes where money grows. And that's how you can tell if the company's making money. And if you can tell they're making money, people are most likely going to invest in those for the longer term to take advantage of the money-making process with them. Sharad is asking, how do you see the primary wave and confirm call arrows on a chart in mobile? They don't have that on the mobile, not on the chart, Sharad. You'd have to go back to the overview or the home page there to be able to see those. All right, so looking at it here, 50 and 150 are still bullish. The short-term moving average is greater than the longer-term moving average, showing short-term momentum in favor of the upside. The stock is steadily rising. The earnings are steadily rising. As a long-term perspective, this definitely looks like a good optimal play here for you. If you go to a 5-year, you can see it's had a phenomenal run. Let's see if I have to probably zoom out a little bit. We'll go back to a 1 year. Just keep it on 1 year for right now. Same kind of concept would apply for the 5-year though as well. All right, so we've got that in. I'm already on your page, so you should be able to see the video. And if you're seeing that, if you're able to type that in, you should be able to see that video right above it. So if you need help with that, you can also head over to our YouTube page. Just search on YouTube for VectorVest Live, and you can find it, and you'll be able to find our live stream there as well. Can you see the DEW indicator on the app? So no, you can't see the arrows like you can in the desktop, but we'll show you how you can set that up to fit the DEW into the charts right here. So you can see the signals. As long as you're familiar with the rules, you can see when you get a buy and when you get a sell based off of that DEW timing system. All right, so this is more of a longer term approach, pretty simple, adding a couple moving averages, seeing earnings per share at the bottom. But what if you're more short-term minded, or even, more of a day trader? You want more responsive charts. You want to see more technical analysis, that type of stuff. Well, let's get out of here. Going back to the list. And let's take Tesla. Tesla's having looks to be a breakout right now, a fairly decent breakout. So let's use Tesla for right now. Well, we see that 50 and the 150 just crossed a few weeks ago. From a long-term perspective, that's definitely a bearish sign. Earnings are steadily rising, no surprise there. But if we go and edit our charts, getting back into our settings, let's go ahead, change our moving averages to exponential first and foremost. And we can do, let's say, a 3 and then an 8. As anybody who's familiar with the YouTube or the Facebook side knows, I'm very fond of the 3 and the 8 for short-term trading. So that's what I'm going to go for as my defaults here for today. Get back out of there. We can add on, let's say, some support resistance. Here you can get into the number of bars you're looking at, just high and lows, or just closing prices, so you can base it off of those. Number of touches, you can really customize this to fit whatever you're looking for and be as short-term or as long-term as you need here. We'll just go with the defaults for right now. So we're looking at number of touches required 2, size of the reversal has to be strong, size of the zone is thin, looking for broken and unbroken lines, and number of lines to be shown. We'll look at all of them that it shows over those 300 bars of data. So we'll turn that on, go back, come down to the lower graphs, and since we're looking for more short-term, let's go ahead and take a look at MACD, for example. As always though, you can customize this. I know there are some other settings for different types of trading. You can program the MACD settings to fit those needs. I'm going to keep with the defaults today of the 12, 26, and 9, but I just wanted to show you guys how you can customize them if you're somebody who uses more of the faster settings for MACD. So getting back out of here, going back into the graph, there we go. So looking at it, we'll start off with the 1 month. 1 month, you can see the 3 and the 8 are turning positive, starting to pick up some momentum. MACD is also starting to strengthen here at the bottom. Zooming out to a 3 month, you saw the support floor right here being hit and then bouncing off of that support floor and then running up to where we're at now. So that's looking good from a short-term perspective. You also see the MACD starting to pick up as well. Then if we go to a 6 month, we see MACD still picking up nicely. The MACD line is greater than that signal line, showing short-term momentum in favor of that upside. The 3 and the 8 are positive. Now, if you're jumping on board based on the breakout that we've seen recently, you've seen a lot of headlines talking about it yesterday. Not going to get into it too much here today, but essentially, if you draw a trend line from here back in January, the highs, connect these high points here, it should end up right before yesterday's opening price, and we're getting follow through from that breakout here today. So getting out of it here, what we're looking for is a run up to this level of resistance. If you're looking for that resistance point, all you got to do is just put it right there. You can find the high price on that day, let's see, was 780. So that resistance level is right around that 780 target. So right now it's trading at 687. That's about $100 move to the upside based off of this breakout that we're starting to see before you start to get into some more heavier congestion that you may see a slowdown in the momentum and may see some, potential pullbacks or some people taking profits at that point. Because once again, support resistance is one of the best crowd indicator mentalities or crowd mentality indicators. So for example, just to highlight that, you saw these lows here, and that was around, let's say 630 roughly. Well, it never broke below that one point. All of a sudden you saw it come down and retest again, never broke below. That tells us that the mentality of the overall investor is that below that point, the stock is definitely worth more than that. And this is the point that if it doesn't break that point, it's going higher, or this is a floor, essentially, if you want to look at it that way as well. That's right, Drew. MACD is definitely better than mac and cheese. So this goes to show that, investors saw this point, this low point here, as a great entry, which helped rise the price of the stock. And since that point, we've never come back and broken below it. So a nice solid floor being formed at that level. Now, as I mentioned, MACD is a great indicator for short-term trading because you're looking at the difference between the MACD line and the signal line. Those light blue and black line you can see back there, and the difference is shown in the histogram or those orange bars you currently see. Well, the great thing about MACD is it not only works as a short-term indicator, but also it can be used as a longer-term indicator as well. A lot of people are not familiar with both methodologies with the MACD. They're usually focused on one or the other. They don't realize that it can actually help for either side of trading, because everybody out there has multiple different, portfolios, typically one for more of their long-term investments and one for more of their play money or their short-term investments. So if we zoom out to, let's say, a 1 year, letting it load. So here on the MACD, there's this level of 0. Whenever the MACD line crosses above that level of 0, that shows a longer term bullish movement. And then whenever the MACD line and the signal line cross below 0, that shows a longer term bearish movement. Well, we can see it crossed below 0 right around that point that it actually broke that level of resistance right here, stayed bearish, and now you're starting to see it's finally creeping up back above that level of 0. So from a longer term indicator as well, this can be a very, very bullish sign. Not only do you have short term momentum moving higher, but you also have that longer term momentum moving higher as well. So MACD can be used for both situations and can be a great indicator to help you out. All right. So one of the requests we had was the MACD, or being able to add the DEW onto the graph. So one thing I want to do, I want to first off go back here. We'll tap on the magnifying glass, which you guys will see how we get more use out of it in just a little bit. But type in the VVC for the VectorVest composite, pull it up, go to our graph settings here. And what we'll do is we'll first off add on envelopes. We'll just keep the default settings here. And then we'll add on take off support resistance because that's not part of the MACD. Lower graph, we will add the DPO or detrended price oscillator. And then moving averages, we'll turn one of them off. We'll keep that one. And then we'll use a weighted 30-day moving average. Okay, we'll maximize this here. Go to a 3-month. And now we're looking at the DEW timing signal right here on the VectorVest composite. So this is how, if you're on just the mobile version, you can check intraday. You can check at any point on the go to see if we've got that DEW up or DEW down. Now, if you're not familiar with how the rules work, just a little insight. When the price of the VectorVest composite closes below that 30-day weighted moving average, and when the DPO crosses into negative territory, that gives us a down signal. When the price is above the 30-day weighted moving average, or when the DPO is in positive territory, that shows a DEW up signal. Now we add on the envelopes to add an exception to these rules. And that's if the price ever happens to pierce and close above or below one of those envelopes, then it only requires one of the two previous conditions to be met to get the reverse signal. So essentially, right now, we are in an up signal. Let's say price spiked and went crazy today and broke and closed above that top envelope right there. Well, all it would take is either for the price to cross back down below that 30-day weighted moving average or the DPO to cross back into negative territory. It doesn't require both to get that down signal or that reverse signal right there. Brett, so I apologize if I'm going a little fast for you. Luckily though, all these are recorded and saved over on our Facebook page, and I don't know if they're going to be saved on our YouTube channel. I have to verify that. Maybe Joey, if he's in the background, could answer that in the chat over on YouTube, and I could answer that question. But all of these are recorded, so you can go back and watch them at your own pace and follow along that way. So if I'm going a little fast, I do apologize. There's a lot of information I'm trying to get in here for you guys today. So there you go. This is how you set up the DEW on the mobile version. Why can't, Dave, same reason why you can't sign in to two different, or you can't sign on two different computers at the same time. All right, so there we go. That's that. That was the main thing I wanted to show with that, is how you can get that DEW timing there. So if we go back into the premium list, go back into the buzz stocks, we have a lot of great stocks in this list. If you're not familiar with this list, I definitely recommend to go check out last week's stream over on our Facebook page. And I believe it's been uploaded to our YouTube channel as well, where you can go back and watch the introduction to this for you guys. All right, so now we've got that. Let's say we scroll down here. Let's find a good one here today. What do we want to do? What's really moving here today? Let's go with CRSP. Go pull up the graph. We see it's having a big up day here today. It's up almost 6% so far. If we go ahead, we can go to a one-day chart. Take off these graph settings because they're not going to help us for this. Take off envelopes. Go in and change our moving averages. So let's say 8. There we go. Turn on the other. Make sure both of those are exponential because we're going to be looking for very short-term trading. Go back here. Oh, go into graph settings. Change the lower indicator to, let's say, RSI. 1 minute. Everything looks good. We can turn on extended hours as well. So even with the basic mobile subscription, the premium mobile subscription, you do get the ability to see extended hours, so pre-market and after hours as well. So you can add that on here if you wanted to. Right now we've got everything set up. Let's add on support resistance just in case. Loading up the chart with all of our new settings. And there we go. So now we can actually watch intraday levels and intraday trading of CRSP. We can use the 3 and 8. You can see the very open. RSI was definitely in overbought territory, but it can stay in overbought territory, just like with stochastics when we talk about those as well. We have the 3 and the 8 positive. Let's say you got in right at the open. It dipped down. It dipped the 3 and the 8 touch for a second. Crossed down here, but then again, you never really got follow through. Right as it broke down, you had a doji showing indecision, telling you should probably just be patient, wait to see for confirmation in the next minute. Next minute, you didn't really have too much confirmation. You never broke to a new low, sticking in it, continuing to run. And then this sideways action, this may be where you probably took some profit, but that's at 136 roughly. And then it opened up, let's see, at 132. So about a $4 profit in a matter of 25, 30 minutes. Not too bad, especially for a day trader. So this can help you be able to time your trades more effectively, especially if you're more short-term or aggressive, in a lot easier manner and wherever you're at or wherever you're at. So if you're on the go, if you're traveling, especially with the summertime, I know a lot of people are going out and catching up on their summer plans and their summer travels because last year nobody got to do that. There's a lot of people traveling, and this is great for on the go, allowing you to see everything you need to see to make smarter decisions and help give yourself a more precise entry and exit into your positions as well. Is there a way to save the settings to jump between different setups? So not in the mobile app, SetNet. You can do that on the desktop, not in the mobile app. The mobile app will just keep the settings that you've used, the last settings that you used. That'll be the settings that it stays at until you go and change it from there. But there's no way to create different settings or graph profiles essentially to be able to switch back and forth between. But that's not a bad idea. I'm gonna write that down and make sure I save that to bring up next time to talk about it, because I do like that idea. We have it in the desktop. Yeah, I like that idea for sure. All right, so if you guys have any questions about the graphs in the mobile app, let me know in the comments section, or let me know in the chat feature as well if you're over on our YouTube. I'm trying to make sure I see both chats, so I apologize if I missed anybody's comments. But if you guys have questions about it, let me know in the comments of the chat section down below. Or if you guys have stocks that you want to take a look at, let me know now. Put those stock symbols in the chat. I will try to get to as many as I possibly can here today. But now's the time. If you have stocks you want to analyze, let me know, and I'll show you how you can analyze them utilizing the VectorVest mobile app in less than 10 seconds. It is the fastest way to analyze any stock at any time, and nobody else out there has a system that will make it easier to analyze your stocks, and I can guarantee that. I've been trading, I've been following charts for over 30 years, or about 30 years now, and I can guarantee there's nowhere else out there that'll make it easier than this. All right, so I see Maria coming in. All right, she's coming in with the stock. Let's go ahead, CURLF. Go ahead, put it in. And now right below that quick graph that you can see, we get those 4 key indicators right there. The RV, RS, RT, and VST. These are all going to be cast on scales of 0 to 2, and above 1 is good, below 1 is bad. So the first one we're looking at is the RV, or relative value, which is looking at the long-term potential of the stock compared to a AAA corporate bond. So below 1 tells us it has poor long-term potential over the next 1 to 3 years when compared to that AAA corporate bond, or a relatively safe investment. The second is the RS, or relative safety, and this is looking at the consistency and the predictability of the company's financial performance. What that means for you though is it's simply an indicator of risk. So above 1 tells us it has less risk, below 1 tells us it has more risk. At 0.91, there's definitely more risks associated with this stock. Third indicator is the RT. Once again, the short-term price trend here. Above 1, short-term trend is up. Below 1, the short-term trend is down. At 1.0, the short-term trend is basically flat for the day, or flat for the time being. And then these 3 indicators are comprised to come up with the master indicator, the VST, standing for value, safety, and timing, And this gives you a quick, great overview on the stock from both a fundamental and a technical basis. So that way you can get a quick answer for yourself to know whether or not that is a good decision for you or if it's not a good decision for you. So now that everybody has that, this is our explanation, or this is our explanatory example here. Now that we see that, to go through it together, this stock has poor long-term potential, does come with some additional risk. It's basically flat right now, so therefore the stock is not favorable currently. AJ, glad to see you. Hopefully you're doing well today. All right, so let's go to the next one. So let's take one from YouTube. So we got ZKIN. And here we go. Now we get to get into the speed of this to see how efficient this can make your trading. So we look at it. Poor long-term potential, a lot of risk associated with this stock. It's steadily moving lower, therefore not a good stock to be into right now. All right. Let's see. Is there a recording to watch? Yes, Peter. All of our sessions are recorded. You can go back and watch them after the live stream ends. JBL. So great long-term potential, less risk associated with this stock. You have a nice steady uptrend. Overall, the stock's definitely favorable. Let's see. SINO. Good long-term potential, but a lot of risk to get to that long-term potential. You're in a steady decline, basically free falling right now. So therefore, the stock is not a good stock to be into right now. All right, let's go see Extro, ROF. So Extro, poor long-term potential, a lot of risk associated with this stock. The stock's in a slight decline currently. Overall, it's not favorable. This is a speculative play. There's a lot of good news on this stock. Not going to really get into it. I talk about it every single week. But yeah, I like the stock. Unfortunately, just not a great time to be into it. Also, Jay, I think you're coming in a little late. So just to give you a little update, this will be the first time going forward that we are now live on both Facebook and our YouTube page. So if you haven't noticed that yet, we are live over there as well. All right, so LAKE, great long-term potential, but does have a little bit more risk associated with it. You're declining on short-term price basis, so it's steadily moving lower, aka you're losing money if you're holding it right now. It's a good stock, decent fundamentals, just not the time to be into it. Let's see. AR, great long-term potential, less or more risk associated with it though. You have a solid, strong uptrend, basically parabolic move right now. So great for a short-term trader as well. Therefore, the stock is definitely favorable. Let's see, AVID, give me one moment. There we go. AVID, good long-term potential, about average risk associated with it here. You're basically moving straight up right now. RT at 1.95, almost as high as it can possibly go. So really strong short-term momentum. Overall, definitely a favorable stock. Let's see, SENS. There we go. SENS, more of a speculative play. It's a biotech stock. No surprise there. Most biotechs are going to come in like this. But this one, poor long-term potential, a lot of risk associated with it. But look at that timing. 1.7 tells us it's in a really strong short-term uptrend. Overall, the stock is definitely favorable. One thing I will point out here when looking at it, let's go ahead, take off a lot of this real quick so you guys can see this a little bit easier out there. Turn these off. Take off support resistance. There we go. Maximize it here. So right here on the 22nd of June, you had a bullish engulfing pattern forming, meaning this candle right here traded all within inside the body of this candle here. It's a very bullish sign, and now the stock's starting to run. Yeah, it's down a little bit off of its highs for the session, but overall, I like seeing that from a technical chart pattern. This is a phenomenal signal to jump on board with. So hopefully you guys are able to recognize this and take advantage of that as well. All right, just wanted to point that out, especially because the stock has such a strong RT. Yeah, Drew, it is. All right, let's go ahead back out of here. And let's see, TSLA. There we go. So Tesla, great long-term potential, less risk associated with it. No surprise there. Solid fundamentals. You have a really nice short-term uptrend, and so therefore the stock's definitely favorable. Let's Let's see, CARR. Hey, Jay, I see you there. CARR. There we go. So this one, good long-term potential, a little bit more risk associated with it. However, you have a stock moving about sideways. You know, whenever you see the RT above 1, that's definitely a good thing. But as we always talk about, a pro tip, if you will, when looking at RT, you want to see it above the level of 1.1 or higher. Anything in between that 1.1 and 1 range is telling us the stock's really not doing a whole lot, and therefore it's a time to be cautious with it, if you will. So overall, the stock's about average, a little bit better than average. Would like to see the timing pick back up, and that would be a good entry. All right, so let's see what else we got. There's Tesla. Why it is speculative? Exactly, Maria. There's a reason why it is speculative. ENPH, sure. Let's go ahead and pull that up. So Enphase, great long-term potential, less risk associated with it. The stock's in a steady, consistent, strong uptrend. Overall, definitely a great stock here. Let's see. Make sure I got all of those from there. There we go. Get back into here. PII. Let's go ahead and take a look at that. So great long-term potential. A little bit more risk associated with it though. Timing is basically flat, slightly down, but basically flat right around that level of 1. Overall, it's a good stock because it has good long-term potential. It is more of an aggressive stock, but the timing is off, so you got to be careful with that. Let's see. Did I miss something there, Ange? I apologize if I missed something. NCLH. So poor long-term potential, a lot of risk associated with it. Timing is in a slight uptrend right now on a short-term basis. Therefore, the stock is not favorable. The momentum is not strong enough to offset the risk associated with this stock currently. Let's see. AMD. Sure. Yeah, we can do AMD. I apologize if I missed that earlier. I'm trying to watch 2 chats at the same time, so I apologize for that if I missed it. All right, AMD, great long-term potential, less risk associated with it, so solid fundamentals. You have a really nice short-term strong uptrend. Therefore, the stock is definitely favorable here. Let me see. What was the other one? Wendy's, WEN. Getting into some meme stocks here. This is what I love. I love it when I get a bunch of meme stocks. All right, so Wendy's, great long-term or good long-term potential. Decent fundamentals, so a little less risk associated with it when compared to the average stock out there. However, the timing at 0.83 tells us it's in a steady downtrend. Therefore, the stock is about average. With the timing being off, I would stay away from this based off of that. Let's see. All right, taking a look at Ford. Ford has about average long-term potential, about average risk associated with it. You are in a steady, strong uptrend on a short-term basis, so therefore the stock is favorable. Fundamentals about average, but that momentum makes up the difference for those fundamentals there. All right, let's see. NIO. You have a lot of risk associated with this stock. You have poor long-term potential because it is more of a speculative play, but the timing at 1.6 tells us it's in a really strong short-term uptrend. Therefore, the stock is favorable right now. Also, if you guys haven't already hit that like button, hit that share button, go ahead and do so now. If you haven't already headed over to our YouTube channel to subscribe over there, make sure to do so you never miss any live streams that we have coming up for you guys. All right, let's see. Torch, alrighty. TRCH. Torchlight. Poor long-term potential, a lot of risk associated with it. You're steady free fall right now. Overall, the stock is definitely not favorable. I know there's talk about that one-time dividend. Glenn keeps talking about it. But you know, from a fundamental standpoint, from a technical standpoint, Torch is getting torched right now. All right, Riot, we'll go ahead and take a look. So Riot has good long-term potential, but does have a little bit more risk associated with it. You're in a steady decline, however, so therefore the stock is not favorable. Crocs, CROX. So Crocs has great long-term potential, solid fundamentals, so less risk associated with it. You have a really nice, strong short-term uptrend. Therefore, the stock's definitely favorable here. FRO. In general, what is the take on the undervalued stocks that have favorable RS, RV, RT like Tesla? Scott, that is the definition of what VectorVest, advocates for. Our mantra here is to buy safe, undervalued stocks that are rising in price in a rising market. Well, we know from the homepage the market is rising. We know from the analysis that it's a safe stock. We know from the timing it is definitely rising. So yeah, that meets everything. That meets our mantra basically right there. All right, so we've got those. Let's take a look at FRO. Poor long-term potential, a lot of risk associated with it, so more of a speculative play. However, the timing is definitely favorable. It has a strong short-term momentum in favor of the upside. Therefore, it's favorable right now. Now, this is more of a speculative trade. So if you're a momentum trader, this is a great stock. If you're somebody who does look at fundamentals, probably going to be staying away from this one. Yeah, I did AMD right after you put it in again. Ange, I'm sorry for that. All right, let's see. FDX. So FedEx, you have great long-term potential. You have less risk associated with this stock. The timing is basically flat though. So the timing is the issue. Good fundamentals. Timing tells us the stock's not really going anywhere. So we're not really going to be able to take advantage of any capital appreciation on this stock. So stock's good, but I'd be careful of that timing right now. Coin, COIN. So Coin has good long-term potential, but a lot of risk to get to that long-term potential. No surprise there. RT at 0.53 tells us it's in a steady decline. Therefore, the stock is definitely not favorable. No surprise, especially with seeing the crashes in crypto that we've noticed over the last few months. Doge, we don't track the crypto exchange or the cryptocurrencies themselves. We're working on seeing what we can do to get some of those in there, but we don't have the rest of those, Maria. FLGT, let's go ahead and take a look. FLGT has great long-term potential. It has less risk associated with it. You are basically in a sideways move. So that's the main thing to be careful of right now. The sideways price action can go either way. If you're wanting to jump on board, wait for that RT to cross above the level of 1.1. And that could be the entry to jump on board with it. All right, let's see. OS or OZSC. OZSC has poor long-term potential. You have a lot of risk associated with it. You're in a steady free fall. Therefore, the stock is not favorable right now. LPX, let's go take a look at that one. LPX, there we go. So LPX has great long-term potential. You have solid fundamentals, so less risk associated with it. Timing, though, is pulling back a little bit. So the stock is a great stock. It's a fundamentally sound stock, but even the best stocks have pullbacks right now. Now's not the time to be long in it. Just keep an eye on it. Wait for that RT to start picking back up, and that could be your entry, especially if you missed out on that great run that it had just a little bit ago, or just a month or two ago. All right, let's do two more here. We'll do a couple more, and then we'll start to finish off for the day. So Workhorse. Workhorse is WKHS. There we go. So Workhorse, a speculative stock. You have poor long-term potential. You have a lot of risk associated with it. I don't think anybody else could justify saying you don't have a lot of risk with this stock right now. The timing, however, at 1.77 tells us it does have a strong short-term uptrend. So that's offsetting the amount of risk involved with it. Therefore, the stock is favorable. Now, if you're somebody who does value fundamentals, take that into note that this may not be the stock for you. If you're a short-term momentum trader, this is definitely the stock for you. So therefore, that's why it has that buy rating currently. Meant overvalued, Scott. Okay, that's fine. So, the one thing about value, whenever you're comparing the stock's price to its current value, and just because the stock is overvalued doesn't mean it's a bad thing. It just means that you're paying a premium to own that stock at this time. The best example I always give is a Ferrari, let's say, or a high-end sports car. Actually, let's go with the Porsche 911 Turbo S, because that's my favorite. So we'll go with that. Roughly, the car costs about $250,000. Now, is everything that goes into that car make it valued at $250,000, let's say? No. People are paying a premium to own that car, to be able to drive it around so people can see them with their Porsche emblem on the front and the 911 Turbo S on the back. The car does not actually cost $250,000 to make, but people are willing to spend that extra premium to own that car. Same kind of thing with Tesla, Amazon. People are willing to pay that higher price now for that expected future reward that the price can bring. So hopefully that explains it there for you. All right, so last but not least, let's get one more in here today. Let's see. All right, I see Wish coming in, talking about meme stocks. All right, let's go ahead and take a look at Wish for you guys. So Wish has poor long-term potential. It has a lot of risk associated with it. You have a slight uptrend on the short-term basis, but not enough to offset the amount of risk involved with this stock. Therefore, the stock is not favorable right now. So hopefully that helps you guys understand. If it doesn't, or if you guys, enjoyed what you're seeing with this, if you guys want to put this to use and you're not already subscribed, click on the link down below. You can sign up for a 2-week free trial. And, as the old saying goes, seeing is believing. Put it to the test on your own. And there's no doubt in my mind that you're going to wonder why you went so long without starting up or without having this at your side. All right. So let's go ahead, recap for the day here. Going back to the home page. Right now, we're still 3 ticks into the green. The market is bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. If we scroll down, take a look. Price is still moving higher. RT is still moving higher on a day-over-day basis and week-over-week. Buy-to-sell ratio is actually improving a little bit. MTI staying about flat from where we started off at. Advances picking up slightly, now at 60%. Decliners picking up slightly, still at 29.8, so basically 30, giving us that 2-to-1 ratio that we prefer to see. Therefore, still see a lot of strength in the market right now. Looking at the major indices, the Dow is up 0.75%, Nasdaq's up 0.8%, S&P's up 0.5%, VectorVest Composite also up about 0.5% here as well. So once again, thank you all for tuning in here today. I apologize for any comments or any questions I missed. I'm trying to get comfortable or get used to having 2 chats running at the same time. Once again, we will be live next week on Facebook and YouTube again. So if you want to, you can now pick and choose where you want to watch from. We'll be on pretty much the 2 biggest social media platforms for you guys. So if you've enjoyed today's session, don't forget to tell all your friends, all your family about it. Let's continue to grow this awesome community that we've built over the last couple of years. And make sure to share this video out so that way other family or friends that may be struggling with their financial independence can see this and help get them on the right track as well. So until next time, take care, adios, and I'll see you guys on Thursday.